Solana's always been an island where like the rest of DeFi has been more of an archipelago. I don't know that I want to see Solana go to like $500 because my ecosystem needs Solana.
The problem is to keep that affordability and drive it down.
With DeFi power users, once they're over on Solana, they're like, holy shit, I just did this many transactions. I don't even care how much it costs. The UX feels flawless. No celebrating it. You know, it's great you hit a milestone, but heads down, back to work.
What's up, everyone? Welcome back to the Next Billion podcast, where we talk to the entrepreneurs, the builders, the people that are powering away during this bear market, during whatever market it is. And we are joined by one of those amazing builders right now. We're joined by Gunny from Hxro. Gunny, what's up?
Hey, George, how are you?
I am good, and I'm excited to be talking all things Solana DeFi today, and we can get into maybe some of those specifics. But yeah, look, thank you so much for joining us on the podcast today.
Yeah, I'm really happy to be here. Thank you.
No worries. Well, look, so before we get into a little bit about Hxro and all of the awesome derivative stuff and DeFi things and broader picture what's going on with DeFi and Solana, maybe you can enlighten us a little bit about your personal journey thus far. How have you got to where you are today to be starting Hxro, and what's your crypto journey been like? I always like to start here because It's very interesting. Actually, people have a lot of common stories, but yes.
Yeah, I don't know. Maybe mine from like the traditional finance background, which I was more in the proprietary trading world of derivatives in traditional markets. And most of my career has been spent, you know, as a trader, or before I got into crypto, I was a chief operating officer and principal of a proprietary trading firm. And I actually first got into crypto. I actually first heard about it. I was in New York meeting with a desk that we were recruiting, and I was having drinks with one of the guys, and he started telling me about his brother had just taken a job at this place called Ripple Labs. And I think this was in 2013, way back. And
early days.
And I went back to Chicago and I talked to a guy that I had worked with, a colleague of mine, and said, do you know what cryptocurrency is? And he's like, oh yeah, absolutely. And he was like way into it. And he was like very early on, he was kind of spending his weekends arbitraging like some of the very early exchanges. And so he started telling me about it. I kind of was like half listening, and I didn't do anything with it, but I kind of kept an eye on it. And not too long after, I think Mt. Gox had happened. And I'm like, oh my God, this thing's going to be zero, right? That's it for crypto. And kind of forgot about it. And then in 2015, the whole Brexit story was, I think, making waves at the time. And I remember just like, I read something that came up about like Bitcoin and some of the principles of Bitcoin and how this all kind of makes sense relative to like things like hyperinflation or things that maybe like could have thrown some of the incumbent monetary systems out of whack. And I looked at Bitcoin and I pulled up a chart, and this was in like beginning of September, end of August of 2015. And it was at like $180. And I said to myself, you know, there's really good optionality here. I was thinking about it like a trader, not, you know, which is like how I was trained. And I'm like, worst case, it goes to zero. Best case is it catches wind and I have really good asymmetric upside here. And so I bought a small amount, like not nearly enough in hindsight, of course, which is just the way it always works.
Always the way.
That was it. And I bought a small amount. I think I bought my first Bitcoin on Coinbase in September of 2015, my first few Bitcoins. I remember the guy that I was talking about earlier that introduced me to it had sent me like a referral invite, and he was like, I'll give you the $10 back that I'll get for like setting up the Coinbase account. And that was it. And I bought some Bitcoin and I stopped looking at it for a while. And then in 2017, I turned back up and things were starting to really take off. And we started doing a lot more in crypto at that firm. And by the end of that year, I was so far down the crypto rabbit hole that I ended up parting ways with the firm and going into crypto full time. And one of a guy who was running an options market making desk at our firm, now my co-founder, him and I had talked about crypto quite a bit during that, you know, the last half of 2017. And when I left the firm, he left a few months later and joined me, and we started trading together. And while we were trading, it was 2018 now, and we were in the beginnings of like the pretty nasty bear market. And we came up with this crazy concept at the time, which became the genesis of Hxro, was this kind of exotic trading meets betting game called Moonrect, which we created this pari-mutualized option, which pari-mutual just means that your bets are all pooled together. We created this option where you're kind of saying like, over some time interval, will the price close higher or lower than like a strike price, a fixed strike price? And we created it, and we built this very kind of degen looking front end. We had no idea what we were doing, full disclosure, other than the fact that we came up with a cool product. And I spent months and months like researching how gaming loops were, kind of like trying to figure out how to build this thing. And we spent, way too much money trying to build it. And we eventually got it out the door. And on Jan 1st, 2019, we sent it out to like 50 people that we knew. And we had a Hxro token at the time, but it had no value to it or anything. And we airdropped a couple thousand Hxro into their wallets. And we said, give this thing a shot. Let us know what you think. And it was like exactly what the market needed at the time, for being that we were in a bear market and like just trading volatility was very low. And we put a chat group together on Telegram that we called the Trading Pit. And it was like every major influencer, everybody got in there, and it was wild. And it really caught lightning in a bottle, and we found some fit with it. And that eventually got us funded and got us moving on it. And the reality is that we wanted to, I really wanted to build on-chain infrastructure. And the original genesis of Hxro, which was Moonrect, was fully centralized, Web 2 build. It just used crypto as like the base currency in it. And the reality was, at the time, crypto didn't have a blockchain that could handle like the type of throughput and low costs that we needed to build on-chain derivatives infrastructure that, that we felt could eventually be competitive with traditional infrastructure. And so we just stayed down this path of creating these esoteric games that are based around like kind of some trading principles, or like things like options or derivatives, but gamified the hell out of them. And eventually in 2020, we found about Serum. And once we saw Serum being built, we were like, okay, like let's learn about Solana. This is very early, right? This is like the end of 2020, I think. And then we made the decision to really turn the focus at that point, went out, set up Hxro Foundation, and really focused in on, got some funding for it, and kind of pivoted how the Hxro token exists and its utility towards everything that was being built on chain, and moved over to Solana and started building there. And it took a long time. I mean, it was like, you were there for those early days of Solana too, right? Like building on Solana at the time was not like building on Solana today. And it was very hard to find good Rust engineers, because I'm technically enough to be dangerous founder, but I'm not an engineer first. So I had to go recruit engineers, which, was a lot of trial and error. And at the time, things were really picking up. You also had places like Solana that were, like paying through the nose for to find good Rust engineers. And so it was very competitive to do that. And
did you ever attend one of these hacker houses or anything like that in the early days? Or I think they were just getting started, or these hackathon things as well.
I was there.
Was that ever sort of on your radar?
It was, and this is pretty cool kind of course of history. So I actually met Bartosz Lipinski, who had just started at Solana. He's as OG as they come with Solana. And we were on a Spaces together. And I reached out to him after the Spaces, and I was like, let's meet up. And him and I hit it off, and we become like very, very, very close, and still are today. And so he was kind of like overseeing things in Solana, in Chicago, and they had just set up a working space, and, Hxro came into that working space. I think we were the first project in there. So I got to see.
I think I remember that. I remember seeing pictures. Yeah.
Yeah, we had some early photos
Solana
there.
Workspace in Chicago.
And him and Jordan were just like conceptualizing the whole Hacker House tour that they ended up doing during 21. Jordan is now the CEO of BJ Studios, of their building studio. Jordan's kind of been like Bartosz's like right hand for the two of them were kind of at the forefront of the whole Hacker House thing. And they actually created some good caricatures of themselves as they did this, which was really cool. They became rock stars for all intents and purposes. But we got there very early, and so I got to kind of see all that evolve and be a part of that early, which was good. And that helped us.
Yeah.
That helped us with recruiting. Finally, I mean, it took a good solid 9 months to a year to evolve a team that was like really able to start shipping. And then it took another 9 months or so to really build what we built. And now it's out the door and moving. So.
And that's the thing as well is maybe people, and we've said it before actually with a lot of these different platforms sort of launching, it takes a long time to build a robust DeFi platform, right? And it takes the skill set and the high bar. I mean, that bar is really high, really.
High.
So
really high, especially in Solana, right? Like there's some really talented, it's an engineer first blockchain.
Yeah.
It's not a marketing guy first blockchain.
Yeah, exactly. And especially back in those early days, like it wasn't, you couldn't just get any old guy off the street sort of engineer to really get started on it. Like you had to investigate quite a bit because there wasn't easy to use libraries and different shortcuts here and there and documentation. And you had to like get into the Discords and be asking people who literally designed the whole architecture of everything. I want to get into how the genesis of Hxro, but also what you guys are doing now, right? So you had a platform, it was more sort of Web 2-y in the beginning. You transitioned to Solana, you hired the right people, you built out the team, and now you actually have a suite of products. So when we talk about on-chain derivatives, there's a lot of derivatives products out there on Solana, which is great, by the way, which is awesome because you can actually go and build products which need high speed on Solana and low cost, which is great. That was one of the reasons we started here, and similar story for you as well with Serum. So it's got a lot of the building blocks, right? But you guys are more than just one kind of different derivatives. So it's not just perps or binary options or whatever. There's actually an ecosystem associated with it. So maybe we can talk a little bit about, what's the Hxro ecosystem like and what kind of products are in there and why they're relevant. I know you spoke about gamification and that sort of thing. And like when I'm on the ecosystem page, I can see some of that. But what's the deal with this Hxro ecosystem?
Yeah, our take pretty simply, the Hxro network and the protocols that make it up. So like there's the primary derivatives protocol, something called Dexterity. And then the primary risk engine associated with it is something called Spandex. And then we also have a protocol for these parimutuel markets, for these kind of two-sided outcome pool betting markets. And in any case, whatever it is, whether it's just markets in general, most people know this, is that liquidity, and this happens in traditional markets too, but it's very prevalent in crypto, even like with major centralized exchanges. Liquidity is like super fragmented, right? You have this issue where when you have fragmented liquidity, it's hard for a larger player to get off any type of meaningful position. And they're also reticent to put real positions on because they need to be able to source liquidity eventually to get out. And you kind of never want to become bigger than the market. And so the premise of Hxro's tech was to build a liquidity layer, like a disintermediated distributed liquidity layer, very similar in the way that why Serum was built. Serum was an order book, but Serum was a shared order book. And that same concept effectively we did for Hxro, but focused on derivatives and betting applications, which are totally different beasts from just like standard spot markets. And I think one big differentiator is a lot of the derivative type projects that have built in, or ones that have perps or future things like that, a lot of them built them tokenized. So they kind of built it off the back of Serum, or which is a really interesting way to do it. And then they rely on things like borrow lend for leverage. And Hxro's engines don't work like that. They're based on more traditional margining principles. Like, so when you have things that are like under collateralized positions, the Spandex, which is the primary market engine, does something called span style margining, which is like what the Chicago Mercantile Exchange uses. So it actually looks at the composition of your entire portfolio of positions and then spits out one risk number, like a margin requirement number. So there's no concept of gearing where like the end user can say like, oh, I want to do 1,000x future or 100x future. They have a margin requirement, which is a hell of a lot more capital efficient. And also it's just generally safer for the network as a whole. And so we put these protocols as hubs, liquidity hubs, attached order books to them. We have liquidity, like base liquidity, that's coming through some automated trading systems and some market makers that are in the market that are participating in like market maker incentives and things like that to build the base liquidity. And then liquidity across the network is shared. So you have a dApp, makes it very easy for a team that wants to build a DEX, for example, or any type of dApp that's using a derivative. They don't have to go source their own liquidity now. They can simply plug in through, either write direct to the contract. They could fork the contract if they want to open source, or they can write to, through an API or through one of multiple SDKs, connect their dApp into the network, and now they have turnkey shared liquidity. So they're sharing the same order books and liquidity. All of their volume is going into that market. There is, a number of other dApps that are connected into that, and they're all seeing and sharing the same order book and ingressing and egressing, hitting orders, lifting orders from each other and from the base liquidity that's there as well. And the idea is that because of the reflexivity of liquidity, is that the more liquidity you get, it begets more liquidity, which turns into more competitive pricing in an order book style market. You get tighter markets. You get much better price discovery because you now have players that can come in with larger size and trade. And those are kind of like the acts in the market. Those are the guys that are really moving the market. It's not like small retail that's doing that. And it'll help give the market a much better understanding of what fair value is at any given second. So
this is, I think, a pretty unique take on DeFi apps as well, because this shared liquidity, I remember trading on centralized crypto exchanges. There was one exchange in Hong Kong that used to do this. They had a lot of different fiat pairs, and they shared actually a lot of the same order book. So it didn't matter what fiat pair you did. They had an internal FX between all of them behind the scenes. So you could place an order in whatever currency and you could share. And that was fundamentally great. Like that was a great thing because you could come in there with some strange currency and great, there's liquidity there. And you don't have to find a guy who's got AUD for Bitcoin in the AUD Bitcoin market, and it actually behind the scenes there's an FX AUD USD, and then the trade is happening on the USD, which is a much more liquid market. So you could come in there with AUD and it was no problem. So it's a similar kind of concept for what you guys are trying to do with someone trying to build an app, whatever it might be. You're not having, because liquidity begets with liquidity. A lot of the time, people that you can be spinning your wheels for like a year or two trying to get this liquidity in the first place, and it's it's very hard.
Everybody's competing for it. You have to pay massive incentives, and when you don't have liquidity there, most market makers aren't going to show up. Like they're going to say, "Call me when you have liquidity." So now you can come easily plug into this primary liquidity touch point. It in our take is like it solves the cold start problem at the end of the day, and now you have this base liquidity and you have dApps that are building. The more dApps that are building to it, like our second take on it was on the dApp side of the equation. It's very hard to be all things to all people as a builder. And one way to do that is to be the infrastructure, like the liquidity layer, because that's something that's universal. Everybody needs it. But, I've found through my last few years in crypto and the fact that it's a very geographically agnostic industry is that a front end or a UI that looks crowded and has too many bells and whistles, to me, maybe to somebody in Hong Kong, like their preference. So like, it's almost like culturally there's differences. And so I've always had this vision of like, let's make it really easy for a team that, like an operator, meaning somebody that manages the front end and is like marketing their front end to an audience. Like they're building a certain way or giving it a certain look or having it do certain thing, have certain features that maybe can make it the largest derivatives DEX in Turkey. And somebody else can come along and build the UI and focus their marketing towards, EMEA, and another one like as a whole, or somebody can do it in APAC. Like the idea is that you need to capture that. To me was just like the idea of having like many small ponds kind of all feed into like one big ocean, because the common thread there is the need for liquidity, like in a Bitcoin perp or an ETH perp or a SOL perp. And then even more so, like once you start getting into actually expiring futures, liquidity gets even harder to source.
Just on that point, if you get some guy who comes in and builds an amazing app, right, and it takes off, and maybe it's a dated futures contracts or something like that, and that attracts a lot of liquidity, that's actually beneficial to all of the other people that might be the smaller ponds out there, the smaller fish in the smaller ponds. But now their app gets all of the benefit from the big guys coming in and trading that particular thing? Because it all goes into the same pond at the end of the day, right?
You got it. That's right. And so take that concept in futures and perps. So we understand that. And now let's apply it to betting apps. Like you have something like these parimutuel markets that are like very esoteric. They're brand new. Ironically, I've seen more and more dApps pop up now, which it's like a blessing and a curse. Like I love it because I invented it. So it's like cool to see that it's found some fit. But sometimes people like, just like Pancake Swap, like blatantly ripped off Moonrack. And that's really like very annoying to deal with. But in any event, it's cool to see. But things like that need liquidity as well. And so you need to these concepts, they hold true even like there, or when you get onto like more classic betting applications. So you want to do like on-chain sports betting, peer-to-peer sports betting, you need to have good, deep liquidity there. And it's hard to source.
Yeah.
And so that liquidity concept applies across a lot of these things. And so we've found this kind of interesting channel as well through kind of the iGaming market, where now there's a team called BitBlox. It's a studio that's building these like widget style games off of Hxro protocols, like the parimutuel protocol, for example. And then those games are like when you go, we've all seen the success of Rollbit. Like Rollbit's an operator, and Rollbit doesn't really carry all of their own games. They outsource it to content studios. So like SoftSwiss or other big gaming companies. So like when you're playing like live dealer blackjack on Rollbit, you're really playing through a software that is like a widget that's from another company that Rollbit is just marketing, right? Remarketing. And so BitBlox is doing that same concept, but with Hxro network protocols backing it, which they've really been the first ones. It's cool. They've got seven MOUs now that are like different operators, and these operators are starting to look for new content. And it's this Web 2 to Web 3 crossover. It's really fucking cool. So there's two dApps or two applications now that are pretty close to launching that like you're going to see a version of Moonrack, like they call it like Up Down or something, that BitBlox has built that is now going to be a widget. Just like if you were on Rollbit and you wanted to play Plinko, you're going to go play Up Down. It's going to be another choice there. It's going to be really cool. And like, so that's kind of another angle that we've found. There isn't a big push yet from Web3 into that space like that. And so we gave a grant to this team to go in and like really do conferences and just really get it out there. It's starting to catch wind. It's starting to pay off for the networks. It's cool. And then the last part that I'll say about this is like, and it's something that we talked about before the show, and I know it's kind of a hot topic in Solana, is like when we did all this, like we really, really we're very thoughtful about how to apply the token, the Hxro token, and how it applies within the context of the network. And we took a lot from kind of EVM DeFi that, really did a good job of evolving, experimenting in terms of kind of token incentives and flywheels and how value accrual works. And so that's kind of like the third part of this that to me is really important. Like we are very confident that we've created a rule set for the token side of the ecosystem such that it really feeds into the eventual like long-term self-sustainability of the network as it progressively decentralizes.
Just on the Rollbit topic, right? I think Rollbit is the talk of the town right now on Twitter. You've got all of these different influencers that are, Rollbit are apparently approaching them with a deal. They tweet about Rollbit and then everyone talks about it. But it's a very sort of Web 2 type of, product that they've got over there, right? So like, I guess
not only is it Web 2, they're like 1000x futures product is what's called a B-book. It's like the equivalent of like what binary options is in many ways, like how binary options brokers kind of like wrecked that industry. First of all, like my hat's off to Rollbit. Like I think what they're doing is pretty cool. And like they've been around for a long time. This did not happen again. Like just like all the things that we all built as entrepreneurs, like that did not happen overnight. I'm hoping that I'd like to see BitBlox. Like I want to see some of these Hxro powered widgets end up on Rollbit. That at the end of the day, they're a giant marketing machine. That's what operators in that space do.
I think the opportunity with the rise of Rollbit and crypto Twitter, now being the talk of the town with people shilling Rollbit links is, can the same be done in a more decentralized, DeFi focused, but also open way to do stuff, right? Like if you, as you say, if you're a front end operator and you have some sort of game that you need liquidity for, you can literally just go to Hxro and just read the docs and then off you go, right? Like what's the process for someone to be one of these operators to go and build a new product? Like what do they have to do?
Yeah, they can literally grab the docs. There is a solid dev support chat in the Discord, and we have the most amazing DevRel who actually just turned 18. That was the most crypto thing ever to me, is the fact that like I don't care how old this guy is, I don't care where he's from, like he's solid. And
doesn't matter these days. Who cares?
Oh man, it doesn't matter at all. And so he's been fabulous. He also oversees our grants program, where the builders can receive Hxro grants, and then that works out because it kind of feeds back into how the whole token design works and the ecosystem works, because in some of these grants now they're like staking grants, so the grant will be staked, and then it's almost like when you're becoming a validator. A lot of times like the blockchain will loan you the initial tokens, then you'll kind of just like pay them down.
It's like a vesting contract kind of idea,
almost like that. Yeah. And then having those tokens there feeds back into like network fee discounts that then can be passed through to their users. It can help increase the revenue for the protocol that's building on top of it, like, on top of the network, things like that. And so we've thought through some of those aspects. But to me, as a product of like decentralization and like disintermediation, Hxro Network is always, the goal of it has always been to like, it needs to be handed off to its community. And like, that shouldn't just be like some VCs that hold a lot of tokens. It needs to be the biggest power users.
Should be the operators.
The operators need to build a collective, because you don't ever want to have the Google Glass moment. That was the thing with Serum. Like when Serum stopped getting worked on, a couple of years ago, obviously there were headwinds that we didn't know about at the time that maybe were driving that. But I was like, you've built an ecosystem. The 70 plus dApps that were built to Serum in some way. And then like the devs just kind of retired or got bored or left, or there was nobody there really.
Man, it was the dumbest thing ever.
That thing could have been like My take, bro, is that Solana really is such a differentiator in the fact that you can run on-chain order books on it. And you just cannot do that on any other blockchain without making it like an off-chain on-chain thing. And like they had it, and it just got completely abandoned. And that to me was like, this is exactly what you don't want to have happen.
I think the point you raise about Serum is such a good thing. I've often thought about this, and I don't think enough people talk about it. It's that Serum was it was an offshoot of some random company called FTX, and it wasn't a founder-led product. It wasn't where, everyone had vested tokens and they had the success of the Serum network, in their minds at every single moment. You had someone who's awake at 2 a.m. on a Sunday thinking about how he can make the product better, or he or she, whatever. That was not the case, right? It was just a thing that people got employed to do, and then there was a couple of people there, and then they went off and did their own thing. So I think the warning sign there is that definitely for important critical pieces of network infrastructure, you need a dedicated team, and a team which, has the vested interest in the success of the product, who live it every day, and who literally maybe even started the thing or did something like that. And if Serum was its own team that sort of just appeared one day and you had some founder or group of founders who really wanted to push it, I think it would be quite a different situation, right? As you say, you'd get those network effects. They'd be like, hey, we're literally the dApp that started everything. Like everyone would be talking about Serum today. And maybe also the tokenomics discussion would be a different thing. Like nobody cared about the tokenomics because nobody had any ownership in the thing. So just nobody cared, right?
They were such garbage, and like
it was garbage. Sorry.
No, it was. Yeah, I mean, it was just a sign of like that was Solana DeFi one plague. Was just there was too many projects that just didn't think about their token economics.
And as well, maybe just your quick thoughts on what constitutes good tokenomics? Because we were talking about this before the call. There's an ongoing Twitter discussion as well the last few days. But the word tokenomics gets thrown around a lot, right? As I said on Twitter recently, it's one of these catch-all words. If the number goes down, you just blame the tokenomics because of reasons, right? Nobody actually knows what tokenomics means, and there's no real definition. There's a lot of opinions on it. And there's a lot of people that will like point at this thing or that thing, but they're actually like 1+1 is 2, right? That's the answer. But with tokenomics, there is no answer. But what are some of the, I think what we can say is there's some core ingredients which must be in there somewhere. So I guess in your mind, what are some of those core ingredients which make tokenomics good versus bad? And we can all agree that Serum probably equals in the bad bucket. But what are these things which actually make it good? And like, are they something we can put a finger on and define, or is it constantly evolving?
I think it's constantly evolving. I think that, first of all, like crypto's just an irrational space, right? Like the good tech meme is the funniest thing to me. Like where you can have a project that has horrible token economics, or it could be the biggest like Ponzi on the other end of the spectrum ever, or have things like 100% cell tax, like just absolutely like ridiculous things that like, you know, what is the Harry Potter, Obama, shitcoin Inu launch, like things like that, like,
yeah, Inu 10 Sonic.
yeah, right. It somehow finds fit with the masses and away it goes. Right. And it doesn't matter how many tokens are on the market. People will do their thing with it.
Yeah. No matter.
So that's a whole other bucket, right? When you actually have a network that you're incorporating a token, like I think the first goal needs to be that it needs to lead to self-sustainability. Number one. Two is I think the utilization of real yield or like protocol revenue or fees, I think is an important aspect of it. And, you know, and I think some of the debate around like, well, how does that play into like the securities thing is very like culture based. Like Western culture has one thought and then the rest of the world has another thought. And that I think you have to keep in mind that crypto is it's a global industry. And so understanding that going into it is important. So design that promotes self-sustainability, that it promotes eventual network effects. And the thing that I think that you need to stay away from is massive inflation, because any way you cut it, it becomes unsustainable for the market. I'm not even saying that like, because this isn't about price and number go up to me as it pertains to that. It's just about creating a fine watch that, you know, you tumble it a little bit and everything's working in unison to create harmony and to actually make it self-sustaining. And I think you have to think about, and maybe that's a little general of a context, but I think about it in this concept of like community capitalism. Like part of why you have value accrual and why it needs to cycle back to community is you need to reward and incentivize those that are providing value to the network as a whole, like the public good, but then also they need to benefit themselves as well, because otherwise they have no incentive to keep going. I think it's like the future of work, actually. Like it's going to give you this alternative to UBI where like I can come to a network, whether it's Hxro network or some other network, and the economics of it are set up such that like I can earn my way I can contribute to it. And whether it's me as a trader or me as a bettor or me as an operator or an engineer or a core engineer, but we're all drinking from that same well. And that well needs to be distributed such that it's properly incentivizing. And that's going to change over time, like how that's weighted, right? Like, which is why governance plays an important role. And, you know, in a somewhat idealistic world, I mean, it never goes in a straight line, right? Like that design needs to be set up so it becomes self-sustaining, and it needs to be market neutral. Like I actually have this, I mean, this is like a question because speculation is such a big driver of crypto markets still, as much as like us as builders want it to be about the tech. It's one does feed the other. But like, I want to hear your thoughts on this. Like I have this thought with Solana, for example, that like in Solana, it's got pretty basic token design to it, right? It's an L1 but like, I don't know that I want to see Solana go to like $500 because my ecosystem needs Solana. We need it for every time there's a transaction, and like my users need to, you know, our builders or the dApp users, they need Solana to pay transaction fees. And so Solana at $250 or $500, like it's very different than when it's at 30. And sometimes I feel like L1, like something like that, needs to think about that. And I always wonder what other people's thoughts are. Like, obviously for like personal reasons, I'd love it to see it go higher, but like as a founder and as somebody who's part of a core team of contributor to a network that relies on it, like it gets really expensive. And then like, you just got to pass through that expense.
I would say, like, number one, I really like the point that you were saying about making things sustainable. I think that should be one of the key points in tokenomics designs. I think related to Solana and like if number goes up, that the problem you're trying to solve for there is if number goes up, does my capacity to service my product and deliver my product to users, does that go down? Is it going to become more expensive and more prohibitively so for users? So I would say that maybe they're actually separate problems in that, is there a way for the value in the Solana network to rise as more people buy the coin and number go up, but also for that to have a neutral effect on the apps which are trying to use it? So I guess, one thought here was people were trying to tackle this with the local fee market sort of idea, right? And having local fee markets for their apps. Maybe there's future things that we can do that offload a lot of work here and there, or I don't know, like you can do more stuff on your own validator, whatever it is, like as long as you can maintain the decentralization of the network, all of the core principles, all of that. Are there more, like compressed NFTs is a great example of this, right? The problem was we want to make it even cheaper to mint NFTs. And now the solution is, hey, you can make $1 million for like nothing. And you can do all of that on chain, and it's all, using all of the existing infrastructure. It hasn't changed the core principles of anything. So I would say that maybe two separate problems. And I think that number go up is good for the network to attract more people and to get more people on board. And I totally understand that network operators, people that rely on this definitely don't want it to become unaffordable. So I guess the problem is, let's look at solutions that aim to keep that affordability and drive it down.
That makes a lot of sense.
Yeah, we're coming up to time here, but I always ask this at the end of every call. We've talked a lot about DeFi and a lot of really interesting things about tokenomics, but number one, where can people find out more about the Hxro network and the whole liquidity layer stuff and the token design stuff? But also, maybe just quickly, your thoughts on what is the future of Solana DeFi? We're in July now when we're recording this. What's happening for the rest of this year? Do we have big things ahead of us? It seems like people are saying, hey, Solana DeFi is picking up and doing pretty well. But what's your take on that?
Yeah, I think it needs some escape velocity outside of the bubble that it's in. Like, obviously, first it's getting right-footed now relative to like the whole world just became about Solana NFTs in the Solana ecosystem for a long time. And now there's kind of this renewed interest back in DeFi, and people that came into the ecosystem through NFTs are now starting to like, look over and learn about DeFi, which is great, right? I think that for Solana to really capture the DeFi communities outside of our current kind of echo chamber, it needs some basic things. Like the Solana's always been an island where like the rest of DeFi has been more of an archipelago, and simple things like getting on MetaMask, which sounds crazy, but the reality is most of the DeFi users still are just like, MetaMask is always their go-to. And so when you go to MetaMask and you go in the drop down, you're going to see all these EVM chains. Like, can you see Solana there eventually? That will help a ton. I think Layer 0 coming online is going to be a big help with that. I know Wormhole already is like making lots of waves there, which is great. I think that, and then also like for it to really kind of take off, and we have a window right now. I think the rest of this year really needs to be dedicated to it to really get the ship, kind of sailing downstream here or downwind. And like, some of that is also giving larger DeFi users things to do. And historically, Solana didn't have that, where it makes sense for somebody to take the time to bridge over and get in and actually like utilize. Like, I've seen this time and time again. Like, I have lots of groups that I'm in with like DeFi power users. Once they're over on Solana, they're like, holy shit, I just did this many transactions. I don't even care how much it costs. I can trade here. It's the UX it feels like more or less flawless. But then I go
once you're there, often you stay.
Yeah. Then I go to the biggest borrow lend platform. It's got $25 million on it. Like, and the guy's like, I don't want to put $5 million there because I don't want to be 1/5 or 1/6 of all the TVL that's there, because that's a lot of risk to me. And so it's liquidity again. It's got to feed on itself, just like liquidity begets liquidity, which is like our theme here, right? And so I think the more you see those assets start to build up, and it gets noticed and it gets into like the DeFi Llama channels, things like that, we're going to really start to see things pick up. And maybe that's not until 2024. And then some of it's obviously the market. The ecosystem, like everything, has some beta to the market. And if the market is going up, everything else is gonna come with it. But I do like that there is a good number of teams now that are really pushing on these things. And yeah, we just gotta keep our heads down. And like I kind of take this position on Twitter all the time. I'm like, no celebrating yet. You know, it's great you hit a milestone, but like heads down, back to work. Like at the end of the day, like there's $44 billion on Ethereum DeFi, and there's like 270 million in whole of Solana. Let's get that to 2.7 billion and then to 27 billion. And then like, I think we got something.
I agree. And I just had a thought of what we should title this podcast. It should be, and this is a note to the editors, Hxro, Liquidity Begets Liquidity, something like that. I think that'd be
I love it.
Pretty cool. But look, thanks so much for your time today, Gunny. Where can people find out more about the Hxro Network, websites, blogs, social?
Sure.
We'll put all links to them as well, but where should people go to find out more?
Hxro.com is a great starting point. That's kind of the main ecosystem site.
And that's Hxro.
It's
right?
Hxro. Yeah, I actually have my OG. We have totally new logos and everything, but for some reason today I was feeling OG. So yeah, here, hxro.com. You go to hxro.finance, which is where like all the staking and whatnot happens. It's at HXRO Network on Twitter, which is really probably the main megaphone. And then there is a Hxro Labs, which is like one of the main core contributors to Hxro Network. Hxro Labs has a Discord channel that kind of is like all things network in there as well. So, and you can get to that just by going to the Twitter.
Awesome. Well, look, thanks so much for your time today. I think the takeaways for today is a liquidity network for anyone that's building derivatives platforms or interesting DeFi things. This is a really sort of unique concept. I really like it. It's about, we want to build the next Rollbit, but build it on Solana. And I think, you know, Hxro Network is definitely one of the ways to look at doing that. So look, thanks so much for your time. Check out the links. We'll put the links in the description as well. And all the best. Have a great rest of the day, Gunny.
Thanks, George. Thanks for having me. This is great.
Awesome. See ya.